Good evening, TheoTrade. This is Corey Rosablue, and you're watching the Theo Nightly video for the day before the Fed, which is the 20th of September here in 2022. Fed Day being September 21st, Wednesday. So where are we? Where's the markets? Where's your checkup before the Fed? Let's start with the S&P. The SPX is continuing to trade lower, which is our downtrend. And a downtrend is just a series of, with a few exceptions here and there, a series of lower lows and lower highs and a general downtrend. So that's where we are in the broader market. The NASDAQ, which is our technology or tech-heavy index, does continue sliding off potentially to new lows. And new lows for the NASDAQ index would be under 11,000 for the year. And the Dow Mini Futures are a little bit different. There are just 30 stocks in the Dow, but they tend to be large market cap names. And the Dow is sliding off to its lows, potentially under 30,000 in the year. And one more index, which is our small caps, the Russell, those peaked before 2022. And we're seeing it push down potentially to 1,700. That would just be a continuation of the downtrend in motion. But are there key stocks leading us there? Now we'll circle back to talk about some of the other markets, but let's get a quick view in today's session. Today's session from the equities or the stock standpoint, we saw the S&P 500 slide 1%, saw the Dow also 1%, and the Russell, that was our relative weak market, and it was down just over 1%, but the strongest was the NASDAQ. All of our sectors took another down move in today's session, and if we want to look at the broader market, there's one major standout, and we'll again circle back to it. It's Apple. Everything else outside of some industrials and a few stocks over in energy and Moderna and a few others here and there that doesn't even make the box big enough. There's AutoZone, again, earnings just had released in AutoZone, but these stocks don't even make the size to show their symbol in the boxes. This is a market cap base look. The bigger the box, the bigger the market cap, and the bigger the market cap, the more it affects the index. So the NASDAQ itself, almost all of it was down today. One bright spot, and it was enough, was Apple. So that's where we are at the moment before the Fed. But as we look at stocks that made new 52-week lows in today's session, and again, how to get this on your own list and your own scan, these are stocks that would be a load scan query. It is public new yearly lows, and you just put in the S&P 500, the NASDAQ, weekly options, or whatever you might want to scan, including a custom watch list as well. What I'm interested in is market cap. So in today's session, 66 of the S&P 500 stocks made new 52-week lows, and they continued ongoing downtrends. In other words, just to underscore the point, the market is not making new lows yet, but these stocks are, and we'll sort them by market cap. So which ones immediately jump to mind? Microsoft, I say Google, but Alphabet, Verizon, Salesforce, Adobe, AT&T, and we'll get down into Micron, Walgreens Boots, and eBay. The list goes on. If you want to pause the video, you can take a look at these stocks in the S&P, or again, you can scan them on your own Thinkorswim. But I sort them by market cap only to see the stocks at the top and how they influence the broader market, and if there's any positions that I might want to trade or recommend as swings or be risk averse in that context. But nonetheless, these are the stocks in the S&P making new 52-week lows. Let's start with the top names in the mix. That would include Microsoft. Just to repeat, the S&P is not at lows yet, but these stocks are leading to the downside. Microsoft, new 52-week low. Behind that is Google, which is Alphabet, new 52-week low down to the 100 per share level on the chart. And the simple breakdown under 100, that's a very simple round number, but after our split, Google shares trade into 100 per share. Verizon Communication, that's down at new lows as well, nearing the 40 per share. We'll look at Salesforce.com, and that stock has come up a lot. There have actually been additional and prior bear flag or short sell trades in outspreads, put spreads, or the like as Salesforce.com got weaker. And then Adobe just had its gap, but even within that context. And just to note, while we focus on these stocks, in the evening videos, there's Adobe. It's off about 60% from that peak. And the peak was before 2022. So Adobe shares currently are off about 58, maybe close to 60% from their recent 700 high. And the stock trades now under 300. And again, that gives rise to a trading strategy to join into or trade short with weak stocks getting weaker. And a few others would include Charter Communications off at a low, and Micron Technologies. And now we're getting into some of the names that would be a little bit on the lower end, and that's just a comparison of market cap. But they would include other stocks you may be familiar with. So going beyond that, as we stand before the Federal Reserve announcement meeting, and what, just to repeat, is our expectation. The expectation here from the CME Group, the Fed funds rate forecast, the probability tool, the Fed watch tool, just is the same as it was earlier or later in last week. So there is an 84% chance that the market gives that the Fed will raise rates 0.75 or 75 basis points. There is, however, a 16% chance that they raise an entire point to the upside. That's 100 basis points or 1%. So the Fed funds rate currently is here. The target rate is there. So that's what we're watching for, an 84% chance of a 0.75 hike and a 16% chance. So that's what the market's pricing in. Just as we go through the Fed, if there is a surprise, and this tends to get it correct, if there is a surprise to the market, if the Fed comes out tomorrow and raises 1%, 100 basis points, that could be a catalyst for additional and potentially rapid sell-side activity in equity futures. If they come out and raise that 0.75, that is what the market has priced in, and that's what we'll be expecting. Given that, where are we outside the equity market? Let's start with the bond market with ZN, and that's our 10-year Treasury Note. It is off at new lows as well. So in the combat or in the fight against inflation, the Federal Reserve, is raising rates. On the flip side, and that makes sense, that rates would be at highs. So these all go together. Interest rates, right here is the 10-year Treasury Note Yield. 35 just means 33.5%. That's 3.5%. That is a fresh new high for 2022. That makes sense. That's logical. The Fed raises rates. They don't control the 10-year Treasury Note Yield. That's what the economy and economic forces do. But nonetheless, as the Fed raises their short-term interest rate, overnight Fed funds rate, that trickles up the yield curve, and we see the yield at new highs. Beyond that, and exactly behind that, I should say behind that, is the bond market, which is price. The price of the bond market is continuing its downtrend. And if we just look very carefully at the bulk or the most of 2022, we see that for the most part, the bond market, which has been in a stronger or more powerful impulsive downtrend, that's tracked the stock market similarly. On the other hand of the bond market and the equities is the dollar. So we'll look at the DXY to be a harbinger, or at least to be a market that we can look at for the dollar index, DXY. Now you might trade UUP, or you might trade other futures products, small exchange, and anything else that would deal with currencies, including Forex, but in this case, look at the dollar index, DXY. Now on the flip side of it, or the same side of it, is the 10-year Treasury Note Yield. For the most part, they have gone together. So from 2022 into 2022, you've seen the dollar strengthen, you've seen the yield strengthen. At the exact same time, you've seen the equity market weaken, and right behind that is the bond market. Not really a broad expectation that we get a change in these trends at the moment. But that's where we are going into the Federal Reserve meeting of Wednesday, where they are expected to raise rates, that 0.75. That is, again, in line with expectation. And that does not change the current trajectory or price pathway of the downside for equity market, of the upside in the dollar index, and on the flip side of that, to the upside in yield, and of course the downside in the bond market, all things being equal. What will Chair Powell say, not just about the interest rate, but about the state of the economy, what he's seeing with inflation, and anything else he reveals at his press conference, and any other questions he might take after the Fed funds rate decision is announced on Wednesday. As always, be careful and safe. This is Corey Rosen with tonight's Theo video update for September 20th, 2022.